Good day. My name is Lebum Tembu, and this is Africa Talks Business, live at the ESG Conference at the Santon Convention Center. We are currently joined by Mr. Michael Salvatico, Head of ESG Solutions and S&P Global Sustainable1 in Africa, the Middle East, and Asia. Michael, thank you so much for your time.
Thank you very much. It's a pleasure to be here.
Thank you. What do you hope will come out of this conference?
Look, I had great expectations coming here. I've been looking forward to come to the conference for the last couple of months, and it's living up to my expectations. We're halfway through, right? Or halfway through the first day. So, what I was hoping to see was the level of understanding around ESG, hoping that the speakers would be touching on the topics, not the easy topics, not just the easy topics, but addressing the more difficult and challenging issues. And I've seen that so far this morning. Also looking forward to meeting the people. Like this is a great event to network, to see who's here, who's represented, the organisations that are represented here, the type of organisations, because that gives an indication of how important sustainability is to these organisations. The fact that they're here, that they're sending senior people to represent their organisations here. So that's another outcome that I was looking forward to, and that actually we're seeing already so far.
And why do you think ESG is so important for companies?
That is a great question. Have you got half a day to talk about that? Really, so I've been involved in sustainability now for more than 15 years. And it's been great to see the increasing adoption of sustainability for companies, for banks and financial institutions, for regulators and governments as well. And the reason that sustainability is so important is because it's critical that we get sustainability right. Companies are a legal construct, and they're represented by stakeholders, largely the investors who have voting rights. But essentially what we see now is the zeitgeist of the time is that companies need to be good corporate citizens. They need to behave in a way that represents and best manages the environment and society, as well as being making a profitable return for their shareholders. And today, the importance of environmental and social issues is high on the agenda of companies. And there are multiple stakeholders who are demanding greater sustainability from companies, not just the investors. So I think sustainability is a critical component of companies. What we say nowadays is that sustainable strategy is business strategy.
Yes. Now, I remember when I was in there, it was Evelyn who was talking about how the ESG is the right thing for businesses to do. One of the main messages I was able to receive was there is value in doing the right thing. There is profit in doing the right thing. I believe it was Clarissa who said profits with a purpose. What do you think are the benefits of an ESG strategy for a company?
Yeah, there's multiple benefits. As you point out, there's the greater long-term returns. I think there's enough evidence now to point to more sustainable companies as achieving greater sustainable returns in the long term. But it's also about the organisation. There's not just the profit side, but there's the reputation side, there's the brand side, there's the ability or there's the organisation's attraction to attracting top talent, the organisation's ability to attract top talent. These are some of the issues that are important to stakeholders today. The way the organisation's managing waste, the way they're managing water, their carbon emissions, their climate change exposure, their climate change strategy. These are all critical to companies to get right for themselves, so that they do have a business that operates sustainably, which means continuously without interruption because of physical risk events or social events, but also that companies demonstrate that they are doing the right thing, they're behaving well. And again, for a long time we've seen evidence coming from different sources that you can, as a company, do well and do good.
Right. What do you think are the top ESG risks that not just Africa, but the world as a whole is currently facing? And How do we go about addressing those?
Yeah, so look, the risks are captured under the governance, environmental and social pillars. The risks that we see as being discussed most by our clients are climate change risks. And so the risks around physical risk or transition risks. And we know, for instance, that there are a large proportion of companies with exposure, with at least one asset exposure to physical risk. And we can actually calculate that number of companies because we've got the asset level data. And with the asset level data, we understand the exposure to hazards like sea level rise, fluvial floods, temperature rises, hurricanes. We can measure the financial impact of those risks on the individual assets of companies. And then we can aggregate up the assets to the company level. And we also see that transition risk is a risk that companies face because there's increasing pressure for companies to decarbonise, to have net zero targets, but not just a net zero target, individual targets for the sectors in their organisations. So we need to understand what their exposure is to decarbonisation, or what their ability to decarbonise is, what the expectation to decarbonisation is, and what their exposure to the risk of not decarbonising is, which is the impact of a carbon price on the company. So what are the earnings at risk of that company, the carbon earnings at risk? And we know that that's in a factor of millions of dollars, in excess of $280 million for the large companies globally, which represent around 13% of earnings of those companies. So it has a significant impact. And so we're seeing companies increasingly want to understand what that impact is and applying a shadow carbon price. Now, how do they know what that impact is? How do they know what the carbon price is? That's how we help companies. We go to those companies and we calculate that carbon earnings at risk based on their Scope 1, Scope 2 and Scope 3 emissions. So we've seen these as a risk that companies are very focused on. And while they're environmental risks, you can't isolate environmental, social and governance risks. They do come together, they blend together, they're intermingled, they overlap. And so the environmental risks that I've been talking about have a social impact as well. And look, if we're thinking about what risks are on the forefront, what risks are companies looking at today that are new, those are the nature risks, the biodiversity risks that we're hearing talked about so much. And again, these are critically important because we know that when we analyse the large companies globally, that around 46% of those companies have at least one asset in a key biodiversity area. And key biodiversity areas are those areas that need to be protected in order to protect the integrity of nature. Nature and climate change are inextricably linked. We also know that those companies they have a dependency on nature. And when we look at the largest companies again, it's around 85% of those companies have a significant dependency on nature in order to continue operating and generating profits. So again, when we think about biodiversity, when we think about ESG, and when we think about profitability of companies, that double materiality becomes increasingly important. Companies need to care for nature in order to continue making a profit. And by caring for nature, they're caring for some of the social issues that we see as important as well.
Right. Well, South Africa is currently facing an energy crisis right now. I'm curious to know, how has it impacted your company?
Yeah, and look, that's a really good question. I think one way it's impacted our company is what I saw when I was at the office yesterday, which is the lights go out, right? So, and heaven forbid that you're in an elevator when that happens because you get stuck. So it's a real problem. And so when I think about how our organisation is affected, or it's really about what we do. So, working with S&P Global, we're an organisation that has enormous amounts of research on energy transition. Now we have a department called Commodity Insights, which works very closely with the oil and gas industry and has deep research on energy transition, what that energy transition looks like, what the future demand for fossil fuels are in South Africa, what the expected pricing is for those individual fuels. And we're not just talking about energy, we're also talking about transition, because transport requires energy as well. So we look at the whole spectrum of energy needs of a country when we're calculating what that looks like. And we provide that advice, those insights, if you like, that research to companies to help them better understand what the impact of this energy issue looks like in South Africa. We also spend a lot of time looking at what the opportunities are. So what's the transition pathway for South Africa? And that's what's critical. There's where we are today, whether you're in South Africa, whether you're a government, whether you're a company, or whether you're anywhere in the world, it's what that transition looks like to an alternative energy future, to a low carbon future. And so when I look at South Africa, I see the benefits of investing heavily in renewable energy, the benefits of solar, the benefits of wind. And when I think about, again, the problem that we see here, the problem that you raise in South Africa, I put it in reference to other parts of Asia Pacific where I work, and that includes Australia. And we know, for instance, that Australia has a significant need to invest in renewable energy and wind-generated power, as well as creating the transition, the power lines, right, that you need to take that renewable energy and bring it to the locations where the energy is demanded. So, yes, there is a significant problem here with energy, and that's felt when the lights go out, but that problem exists everywhere. And so, this is a global problem, and a problem that we all need to solve together. And it's a problem that bringing people together at a conference like this, collaboration, brainstorming, generating the ideas for investment, it's here that you create that energy to solve for this problem. So, again, S&P Global is here to help with that understanding of what the issue is. This conference is sponsored by Market Intelligence, S&P Global Market Intelligence, who also have enormous amounts of data for companies, used by banks, used by investors. And finally, one more way that we help that it affects us is through our indices. So S&P Global constructs indices. One of the best performing alternative or thematic climate indices we have is the Clean Energy Index, and that index helps investors with a thematic tool, allows them to, an exchange-traded fund, to invest in those solutions that are solving for the problems that we're seeing in South Africa now. Very focused on clean energy solutions. So this is, how what we see the energy crisis globally, and how the role that S&P Global plays to help fix that.
Right. Michael, thank you so much for your time.
Thank you. It's been an absolute pleasure, and look forward to the rest of the conference.
All right, thank you. All right.